Thanks again for joining today. The main focus of today is going to be to place a trade inside of Thinkorswim is the tool we're using. We're not pushing any particular brokerage. It just happens to be the one I use. Yeah, we're going to do a quick review of some of the things we covered last week and then kind of show how alerts like the ones we set last week show up on days like today, and then place a trade and then also put a limit order. We had some questions on that last time about how to place a limit order. I actually saw a question in community about it, how to place a limit order in Thinkorswim for a multi-leg strategy. So that's what we're going to do. And first, I'm going to start off with the disclaimers, as I always do. And we should be recording already. Great. This is not a solicitation to buy or sell any security ever. This is not advice. You should read the characteristics and risks of standardized options. The results here are provided for general information purposes as a convenience to the viewers. The materials are not a substitute for obtaining professional advice from a qualified person, firm, or corporation. Trading futures and options involves the risk of loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than their initial investment. Past results are not necessarily indicative of future results. The risk of loss in trading can be substantial. Carefully consider the inherent risks of such investment in light of your financial condition. Great. I'm Jason Hitchings. I'm the CTO at Capital Market Labs. I wrote TradeMachine code from a code perspective. I worked on all the strategies with Ophir and just from a product perspective. And I've been in fintech and options for quite a while. Yeah, so we're going to do a review of last week just to kind of keep it fresh and catch anyone up who missed it. I'm going to show alerts I received and then place a live trade and then place a limit to exit that trade. Then I'm going to show a new feature coming up, a little sneak peek of something coming up soon. Just a real quick recap. If you've joined the last couple of sessions, you've seen this. I'll just be really fast. We are firm believers in writing your trade down when you entered, when you're going to exit, to kind of take some of the emotion out of it and helps you stick to your plan. In order to figure out if a strategy is really working, you can't just place a trade or two. There might be a strategy that has a 30 delta option, and if you're winning that strategy 40 or 50% of the time, it could be a huge winner, but you place one or two trades and you have no idea if it's going to be successful or not. So taking a few trades over different market conditions, a few different strategies is going to help you hone in on what strategies are really working. And then just a matter of personal opinion, I think starting small until you start seeing some wins and then sort of scaling up with your profits is a nice way to manage risk from my just very personal opinion. This is an example of how to write it down. Real basic, just when you entered, what it costs, when you exit, if you made money, if you lost money. I put a share link as well. Okay, so last week we looked at saved strategies. So on the top right of the backtest tab, you'll see some saved strategies, and you can click, and all the ones at the top are the ones that we've created at CML. Just looks like this. You just click Save Strategies, and there's a bunch of strategies here. These are all in the Today tab. So we tried one, I think we did the bullish burst, and it loads a specific backtest because you can save actual specific backtests. But then if you want to kind of make it current, this was saved back several months ago, but if you want to make it current, you can click one of the buttons at the top and that will bring it up to the current date. And then if you really want to start backtesting with it, then you can change the symbols or you can click portfolios. So we did the Qs, the NASDAQ 100, and saw how that strategy did. And then we started playing around. We said, okay, what if we do a call spread instead of a call? How does that change the results? We looked at the total average trade percent. We looked at the percentage of wins. If the percentage of wins went up, the average trade percent went down a little bit. And then we said, okay, is there something else we could do here that could give us better than just a straight call and better than just a normal call spread? So we went in and we created in these custom strategies, which you would find down here. And you could click add, or you can load the strategies. And we created this custom diagonal. So we were long the 40 delta 30 days out, and we were short the 30 delta 14 days out. And then we started doing some back tests with that. And we saw that it had a pretty good effect on our average trade percent. And we tried a couple different, time frames and deltas, and we're able to come up with strategies that worked well in different market conditions. I looked over 1 year and 2 years and found that for, what we were looking for in terms of average trade return, et cetera, that it was doing better than either one of the previous options, one of the previous strategies, like either just a straight call or a call spread. Here's an example. So we went on the call spread. We are at 10% return with this diagonal call spread, which we're still long. Excuse me. We took that up to an 18% return. So a significant average trade was a lot better. It took fewer trades because of the nature of the trade. And then the win rate was down a little bit, but the total average trade return was great. From that, we set some alerts. And so I like to sort by average trade return and then just go down and click tickers that have multiple trades attached to them. So I went down and then I clicked add alert and we set some alerts, and that's kind of where we left that session off. So we're going to just pick up right from there. So with a very similar strategy, this is a 50-20, call diagonal instead of the 40-30. The time frames, as you'll see a little later, are 60 days and 30 days instead of 30 days and 14 days, but very much the same concept. And so I got some alerts that came in on a strategy, and so I wanted to use one of them as an example today. We had two to choose from, and this is an example of what the alert looks like when it comes into your email. So it just kind of gives you some reference information on the stock, and then there's a share link. And when you click the share link, then it kind of pulls up the strategy that you had loaded. It could pull up from multiple tickers, and so you can just pay attention to which symbol you actually got a notice on. So because it might not trigger for all of the tickers that you set the share link for. I got a little, excuse me. Okay, so just for kind of sanity checking, I took that same strategy, and instead of it just looking at it for these two tickers, I wanted to look at it for a basket. So I took the exact same share link, all that kind of stuff. I can update the end date till today. And then I just did a portfolio backtest with the QQQs and just saw that, yes, this has, 21% average return. That's great. 56% average wins. That's great. So we were very happy with that. And so then it's a matter of like, okay, which trade do we actually want to place for the ones that are active today? And in terms of what this actual strategy is, as mentioned, you're long the 50 delta 60 days out, and you're short the 20 delta. I might have said 30, but you're short the 20 delta 30 days out. So, very similar, just slightly longer time frames. The technical conditions are shown here. It says in the last 30 days, the stock was down 10% or more, and the stock is below the 200-day moving average. So, and then in the last 6 months, the tailedness of the stock returns has been below 0, and that just means that how big the moves are, that the tail tends to skew in that direction of the lower moves. Not skew, but the actual size of the moves is relatively small. So looking at these two and trying to decide which one we wanted to do, kind of wanted to look at the most recent stock movement. They both just came off earnings, and Comcast, had a bigger drop. It was kind of struggling to recover. It's like moving down a little bit more on the day. And then Charter Communications just was, it kind of tested some sort of downward pressure in the middle of the day and then came back up. I just felt that between the stock movement and also this just had better portfolio, but better backtest returns in the last 2 years, ended up going with Charter. And so when it comes to actually placing the trade, I can probably click that and pull that up. Yeah, so for Platinum members, so this little green flag shows that this trade is active. So when I get a share link, it might be this, or it might have a few more tickers in it, but I know that Charter is the one that we're looking at. And you can see that this is active, and that little green badge, as a reminder, means that the technicals are true, and that if there's earnings conditions, those are holding as well. So if you're doing a 7-day pre-earning strategy, it means that it's 7 days before earnings today, and the technical conditions are true. Even if you get an alert, or if you see something on the Today tab, if this changes, if the stock moves since whenever you looked at it in the direction that changes things, then this will turn gray. And then for annual subscribers, we call Platinum, they have this little convenient button called Show Options. It says, hey, double check the data because it is a little bit delayed. And then this is showing what you would actually do to place the trade. It's saying you'd get long the June 21st 260 calls, and that you would short the May 31st 285 calls. So you're going to be holding the option, which is both further out and the future, and it's also giving you a right to buy at a lower price. So this is definitely a long strategy because the short leg, you have less time to do it and you have the right to buy the stock at a higher price, so it's less valuable. So this is, a long diagonal. But that's not the only way to do this. So if I click down here and look at the strategy, so I just clicked edit to see the details of the custom strategy. And so again, we're looking for a 50 delta 60 days out and a 20 delta 30 days out. And so another way to look it up, you can do this in your brokerage or you can do it right in the options chain. If I click the show options chain button, then this will load the full options montage, and you can scroll all the way down to look at everything. It generally will only show options that make sense, where there's an actual delta. If there's something where midpoint is underwater of the theoretical value or something, it won't show it. But otherwise if you have a clean options chain, it should show all the options. There's a little quick filter here, and it shows you how many days on the right-hand side we are into the future. And so we know that for the long leg here, we want to be about 60 days into the future. And so the two to choose from would be 52 days or 108 days. And so 52 days is much closer. And so then it's a call, and here's the call delta. And so I'm looking for something as close as possible to the call of a 50 delta on the left-hand side here. So right now it's real clear that this 260 strike in June is the closest one. So that's going to be my long leg. And then for the short leg, I want to be about 30 days in the future. And we have an expiration that's 31 days. So that's real close. So that worked out nice and cleanly. And we wanted to be at the 20 delta. So we're trading calls on the left-hand side, and we just kind of come down and find the one closest to 20 delta. And it turns out that there's one right at 20 delta. So that made it easy as well. So we're going to be shorting this 285 May 31 call. So yeah, just kind of showing how you can do the drop down. You're just finding those deltas and strikes, and it's coming up with the exact same information that clicking to show options did. So there's just a little speed up. And the more legs there are, the kind of more helpful it is. Okay, so then I went inside my brokerage. I used Thinkorswim. This time I used the desktop version because I think a lot more people use the desktop version. The desktop version has a lot more power than the web version. It's a little more complicated. There's like sometimes more steps where you have to do things a little bit differently. But I entered charter. I went down to the options chain. It's the same thing. This little thing in parentheses here is saying how far in the future, how many days in the future the options are expiring. You see that still it's kind of coming up with the same data. We know this is the information we're looking for. When I open that options chain, I'm still doing the same thing. I'm just looking for the delta. It's just showing a 52 delta. And so that it's coming up. Here's that expiration, and the strike is way over here in Thinkorswim, showing that same 260 strike. So you can start kind of loading that leg up. And then the same thing. So I'm going out, looking down the column, finding 31 days in the future, looking for 20 delta. Again, the delta is lined up perfectly. It could be off by a little bit. The data is 15 minutes delayed in TradeMachine, so you might see things slightly different. There's no harm in taking, using the updated deltas from your brokerage platform. Yeah, but we're seeing that same 285, strike for the short version. There's different ways to enter it into a multi-leg strategy in Thinkorswim desktop. One way you can do it is to right click and then say buy diagonal, buy and then diagonal, and then to adjust the strikes. So that's what I did here. So this is the diagonal. And then I was kind of just clicking the expirations to update the expirations, clicking the strikes. And then it defaulted to 10. Each one of these is costing about 1100. So I just did it 3 times. And then you just kind of try to set a price that feels kind of close to the middle of the market. I've been using TradeMachine or Thinkorswim web more recently. It's actually, in some ways, I think a little cleaner. I actually like some of the information they display. There's less information, but it's kind of just what you need. So it was actually took me more steps to do it in the Thinkorswim desktop version. But yeah, you enter all that information in. It shows you what the effect on your buying power is going to be. And then if you want to take the trade, you click send. And then you can see trades kind of come through, on the trade list down below. So then the question becomes, okay, well, when do we want to exit the trade? And so looking back at the strategy here, down on the left-hand side, it says close trade when. And so it says close trade when the gains are above 80%. There could be other rules. And also if it was an earnings trade, like a 7-day pre-earnings trade with custom earnings selected, then it might say you want to buy the options 7 days before earnings and sell them 1 day before earnings. That's a strategy that we use to kind of take advantage of the sort of, excitement going into earnings and the increased vol. But this one says nothing special, so you just want to make sure that you're not in the middle of earnings right now. We just passed earnings, so it's now showing that the next earnings is way out in the future, unverified, but that's just because we passed earnings here. It shows on the chart here just, a couple days ago. But when it comes time to exit the strategy, it says that we're going to exit when our gains are above 80%. And so we put the trade on for a little over 11. If I multiply that by, 1.8, then it gives me about $20 would be my target price to exit the strategy. Looking down here. So when you had these actual positions in your, Thinkorswim account, if you're using Thinkorswim, so for me, I had to select both of them by holding down Control, and then I could just say create closing order. And I said this, sell the diagonal. So you could either sell individual positions or sell the whole thing. So I clicked sell the diagonal, but I wasn't using the price that it pre-populated. I just came in and adjusted. It pre-populated at the time. It was bouncing around, but 10.15, and then I just updated it to 20, the price that I was looking for. And I didn't want it just to last a day. I wanted it to last until it canceled. So I said good till canceled. And then I clicked confirm and send and sent that trade through. And now it's just waiting. It's going to try to exit that trade for, about $6,000 total. And so then there's actually not that much more for me to do with this particular strategy, which is nice. There's not a lot of things I need to watch other than just, seeing what happens with the trade performance. You can also see in the little trades down below that it'll say, this little buy and sell indicators come up saying that it's trying to buy and sell those two positions, and that it shows that the trade is in the working status, not in the filled status, and it'll be that way for a while, and if that trade is a winner, then that'll get filled and I'll get a trade notification. So yeah, we had a little question about how to put in limit order with the, multi-leg strategy. So I just wanted to walk through that real quick. Trick for me on Thinkorswim specifically was to click every leg, and then do right click and then close trade, and then you could close the diagonal that way. Okay, last little thing before we jump into any questions that we have today. We like to keep these, between 30 and 45 minutes. So hopefully I didn't go through that too fast. If I did, one, you'll get a recording so you can go through it in as much detail and as slow as you'd like to. And two, I'm happy to answer questions about it. I did want to give a sneak peek. We had a data feed that provided by SIBO that they stopped providing it to sort of the retail market. And so we ended up needing to take it from the product. We've been asking people for a while, hey, is that something you miss? Is it something you would use a lot? Initially, the response seemed to be it wasn't a big deal, but we've been hearing more and more that, hey, people really missed having that feature. And so we wanted to let you know we have some good news that we are bringing back the implied volatility index and the historical volatility index. So what we're doing with the implied volatility is we're saying, okay, look out approximately 30 days into the option montage of each stock, look at the call and put volatility, average them together. If there's like a 15-day in the future and a 45-day in the future expiration, then we kind of average all those things out. And we come up with a implied volatility number that represents where the stock is. And then so let's say a stock like Apple, let's say the volatility trades between 25 and 40 during normal circumstances. We then take that range of 25 to 40 and we turn it into a percentage from 0 to 100 or 1 to 100, saying that basically to let you have a little more granularity, and so that you don't have to worry about the specific vol of every stock. We're not saying that you need to know what the specific vol level is in order to trade it. We're saying, okay, from a percentage perspective, trade if the percentage is relative to that same stock is above the 50th percentile or below. You'll also be able to say if the implied volatility index is above the historical volatility, and the historical volatility is just telling you how much the stock has moved recently. So those things are coming back. They're in pretty good shape. We're kind of just doing some testing, but we have a lot of good progress on that. So we are expecting have those in the product, hopefully, if everything goes smoothly, sometime in May. So we're happy to say that those are coming back. Great. That's all I wanted to cover for today. If we have any questions, I'm very happy to take them.
I just had a question that came up while you were going through your walkthrough, and I think it's something that is really good to cover with what you covered today. And that is, how do you get alerts regarding exit conditions.
Mhm.
So since we don't have a built-in automated alert for exit conditions on a trade, how would you do that?
Yeah. Okay, great. It's a good question. So I'm going to go to the Today tab, and I'm going to use an example that's easy to work off of. So short answer is on limit for limit trades with options. It's a little we can't specifically notify you when the options have reached a certain value at this point. You can set a stock price, so you can say like, hey, if the stock goes up $5, let me know so I can kind of like check in on my position. So you can kind of approximate with stock. If you look at the delta, you could kind of come up with a ballpark of where the stock would need to be. But I'll look at one that has a little bit more of a concrete answer. So this strategy is a pre-earnings 7-day call. It involves buying a call before earnings, but not holding it through earnings, just exiting right before the earnings date. So I'll just kind of pick, one of these at mostly at random. Actually, what I'm going to do, I'm going to use this nice little platinum feature, and I'm going to set the liquidity of the option, saying basically tight markets and nothing below $5 is what the 4 means. And come back here, so I'll look at BHF. So that's called Bright House Financial. And so if you look at the custom earnings here, it says I want to open the position 7 days before earnings, but I want to close the position 1 day before earnings. And so the question becomes, okay, so I just put on this position, but how am I going to, I have to put something in my calendar? Like I don't want to just be like looking at this thing every day. I don't want to miss it. I don't want to accidentally hold it through earnings. So how do I do that? So you can actually just pretty easily. So it says that the next earnings is on May 7th. So, that logic pans out. So I can just take BHF, and rather than clicking add alert, you could. Nothing wrong with doing it that way. But I can just enter the ticker. I can say days before earnings. So we started this position 7 days before earnings, but we want to exit the position 1 day before earnings. And so I can write myself a note and say exit trade. And then if you had a share link from the strategy originally, so if I did something like, so this was the share link, so I can just copy this link. If it says share equals, or you can click this button, it'll create one for you. And so
Or
I
if
could,
you select the add alert, it's going to pull the share link in
yeah,
for
it,
you.
it will. So that when you're adding alert, it's going to use this technical condition.
Correct.
So you'd have to change that. So, different approaches. They all kind of get
Exactly.
the same way. But yeah, I'd say exit trade, and then I'd send myself a share link. And now 7 days before earnings, I'm going to get a notice. I'm going to get a share link. And so when I click that share link, it's going to pull up the trade and say, hey, exit this thing. You can also do calendar alerts. I'm going to delete that because it's not something I'm actually trading. So another way to do it is if you just know a certain day, you can set a calendar alert. So you can kind of do the same thing that way. Or if you have technical conditions, then you can, if you have, you can just set the same alerts in the technical. So if you wanted to exit, if you set a technical close saying this is opening when the stock is above the whatever 200-day moving average. So if you wanted to exit when the stock price is below, for instance, just I'm picking something randomly, then you could, when you're adding the alert, pay attention. So that was the 50 days. So you add alert and it shows you the technical conditions. It says, I'm going to get alerted when the stock is above, but you could change it. You could say set technicals and say below and, whatever your technical conditions are, and you can get alerted that way. And you'll still have that share link attached, which is kind of what Amanda was alluding to. Yeah, so a couple different ways. If there's like a limit order in a stock and you knew you wanted to be notified, then yeah, you can sort of approximate it with like a stock price alert. This was a different trade, but you could say stock price above, and so this wouldn't tell you concretely it's time to exit per se. You'd still need to check your brokerage to see what the options chain has done. But if you know the stock's trading at whatever it is, 250, then you could say, or I think it's like more like 290. You could say when it reaches 300, like see if options or see how the options are or something like that. Check limits. But easier than that is just to set the limit in your brokerage account, and it can automate that part of the process for you. So yeah, I guess when it comes to an actual limit, if in terms of being notified when to close, if it's based on a limit, then I would say, yeah, I would set it in your brokerage and it'll sort of automate that for you if you feel comfortable with that. If you just wanted to sort of check back in on the price, if the price moved, then you could do it this way. You could sort of set a price to be notified when it gets back to that price. Yeah, and if it was like an earnings condition or something like that, then yeah, you can just very directly set the alert in the tool.
Perfect. Thank you for going through that.
Of
I
course.
thought that was a perfect question and it came in during live help.
Great. Someone said that they set alerts and haven't received them. Yeah, so we can check to see if they're bouncing off of your email or your text. So yeah, just let us know if that's happening. Just email support, and we'll look into it for you. I'm trying to figure out how to turn my CML alerts that I created into trades. I get emails, but when I click the link, it populates all of the QQ stocks all over again. Then I don't know what to do. Looking at the today works well and is easy. Yeah. Yeah, so we might right now when you click a share link, if you create a strategy like with multiple tickers or whatever, then when you create a share link, which is the same thing that the backtest uses, it populates all of those tickers for you. There's pluses and minuses to that. But yeah, this is causing a little bit of confusion for people. Really the easiest way is when you get that alert. I'm just going to pull it up on another screen to save. I don't want to make anyone dizzy by going through 500 screens. Okay, here we go. When you actually get the alert, the subject line will tell you what the alert is. And so then when you pull it up, when you pull up the actual share link, then what you can do is, so let's say that this was the share link, and let's say here we'll do an example where it's like the QQQs. I'll simplify it to the Dow 30 so it's a little faster to run. If this is running a little faster than you're used to on your side, I'll just make a note that Platinum users kind of get access to some servers that we're able to reserve a year ahead of time, and we can kind of get some faster servers. So if the speed of the backtest is important to you, then you might want to consider jumping over to annual. Here, if I'm setting a whole bunch of alerts, when I create that share link, this is the same link that is going to populate when I actually get the alert. So you're seeing all these different things and you're saying, okay, I don't know what was active. That's not helpful. One, we're going to try to put a little green dot. It's a lot of computation on our side, but we know it would be helpful for people. So we're going to try to put a little green dot so people know which trades were active. I know that it would make things a little bit more helpful for people, but I just want to say that in the actual alert text, it'll say what the ticker was. And so you can just update this to that ticker. And now you'll just be looking at that one stock and it'll say whether, this is a different strategy. So it's not showing active, but it should show that strategy is active if it is still active. And then if you're platinum, you can click the show options button from there. So if you get an alert with like 20 tickers in it and it's a little confusing, just go back to your email. And then from the email, just enter the ticker at the top, and all of the other conditions are going to be the same. The important part is that the technical open and any kind of custom earnings, all that kind of stuff can be exactly the same. It's just you can look at it at one ticker at a time. But it's helpful to do these sessions too, because we get a lot of the same questions. And then when we see that something is causing people headache, we just, improve the product so it's not causing people headache anymore. And this is clearly one that is a little confusing. So I think you could expect in the next month or two that we'll do something to make that a little simpler. Okay, I would like to see trades that were or are alerted. Is there a running P&L statement or a monthly summary? Yeah, that's another request that we get quite a bit, is to kind of be able to track trades, essentially like paper trading. So you can kind of do it manually by, clicking a trade. Like if you go to alerts, you can look at your history. I have a lot of history because I have a ton of alerts, so it's taking a second to load. But what you can do is you can set the start date to be equal to when the alert was received. So if I received, some particular alert, so this says from March 28th. So if you want to see how that thing has done, then you can set start date to March 28th, and then you can kind of see how it's performed since then. But we know that people would love to see like a portfolio of trades, or basically almost like a paper trading account where they could say track trade, track trade, track trade. I think we can say with pretty good confidence that we'll get that in the product before too long, because it's a pretty frequent request. I joined as a Simpler member. Are there specific strategies that Simpler has on the TradeMachine platform? Yeah, the squeeze strategy, the bull and bear squeeze are inspired by the TTM squeeze. There are very small differences, and I think you might be getting some announcements on your side about some more collaboration that we're doing sometime soon. Thanks for the continued educational efforts. I still struggle to some extent because I have a membership to CML Pro, TradeMachine, and Pattern Finder, and I find myself not sure what guidance or ideas to source from what. Not complaining, but I feel like I'm not using methodical approach to research a proposed stock. Yeah, so CML Pro is a research service which is really phenomenal. It's just performed extremely, extremely well. And so but it's a little bit of a different animal. It's really about stocks more than anything. It's done extremely well. It's a list of stocks, a list of top picks, and we've tracked those with an auditing firm, and they've done really, really well. That's much more of a buy and hold situation, and then there's research that you can read. So this now I'm going to go and we don't give trading advice, but I'm going to give you my personal take on it is that putting a small amount of money in a wide range of CML Pro stocks, as opposed to trying to cherry pick and kind of starting with the spotlight top picks and working your way down and putting a small amount of money across a lot of different stocks, and then just then you can keep up with the research just because you're interested to know what the stocks are doing. And if fear says that it's time that he believes it's time to exit, then obviously pay attention to that. But that service is kind of a set it and forget it service. In terms of TradeMachine, if you're and first of all, thank you for being a member of all these different services. That's super awesome. With TradeMachine, if you're getting started and feeling a little overwhelmed, I would just pick one of the strategies that says like beginner or intermediate. I'd watch a video on it, and then I would say, okay, I feel comfortable with the buy the dip or fade the dip or bearish bursts. I would go up to set today tab alerts, and I'd pick those strategies. I might say just alert me when it's the largest 500 or the largest 100. And then I'd probably just wait for the today tab alerts to come in. I'd click it. I'd look at the, you know, actual strategy, make sure it's still active. And then if I like the returns, if it's 7 wins and 2 losses with a nice, 200% return, then I would say, again, personal opinion, take a small trade in one of those, for a couple $100, $500, and then watch it, write it down, see how it does, and then do that a few times and see, if that strategy is working for you, record those trades. And then if it is, then keep doing it and scale up. And if you're not having good luck with it, that try another strategy. Eventually you're going to find one that's working well, and then you can really start to scale up the size of your trades and see the returns pile up. And we owe everyone a pattern finder specific webinar too, so we'll do that soon. That's a really cool product for kind of swing trading. Is there now, or will there ever be, a way to create custom strategies for backtesting using expected move for a given expiry other than delta? So Mark, depends what you mean by expected move. So because in a way, implied volatility is expected move. So we're adding implied volatility very soon, but it's not directional. It's up or down. So depends how you think about expected move. Feel free to follow up with another question. Are you saying that maybe what you're saying is if a stock is trading at 100 now, then I would want to enter if the stock is 10% above where it is now or something? Basically, the moving averages sort of capture that in a way. But if you give me a little more detail, I'll try to give you a more concrete answer.
Jason, he
Yep.
says, I usually approximate by at the money call plus at the money put.
Yeah.
He's
Okay. So if
asking,
you're looking at so if the at the money call and at the money put, let's say they're each trading for 250. So that'd be like a $5 move. And let's say it's trading 14 days in the future. So you're saying, okay, now I'm talking about, I want to trade this if the sort of expected range of the motion is $5 in the next 14 days. So doing that on a per stock basis, obviously when the stock is trading at $15 versus if it's going up to $100 or back down to $40, it'd be pretty hard to like say if the sort of width of the at the money straddle is, the sort of total value of the at the money straddle is greater than X, trade it. I think it'd be pretty hard to actually create a system to do it that way that would be consistent. But the good news is that's basically exactly what the implied volatility is. It's looking 30 days out in the future, and it's saying that the implied volatility is saying what is the amount of motion in the stock that the options market is telling you there's going to be. So there's historical volatility, how much has the stock moved? The implied volatility is a forward-looking view of what volatility is expected based on in this case, it would be the at the money option prices. So basically what you're talking about is an implied volatility index. And the good news is because we're treating it as a percentile, instead of you trying to say if those two things are above $5 or something, we can say if it's above the 50% mark or the 70% mark, then I want to trade it or not trade it. So I promise that was not a plant, but it was a perfect question leading into what I just mentioned, that we are bringing the implied volatility index back into the product. And that's going to say the market is forecasting a certain amount of volatility, and now you can trade it based off of forecast volatility, and you can choose whether you want to include the previous realized volatility as well. So once that feature is out, we'll do a dedicated help session on just that feature, and we'll go into a lot of details. If you're used to looking at an options montage in terms of the sort of midpoint on the bid ask, of the call and the put, completely understandable way to look at things. And we have a lot of great resources to understand how implied volatility sort of captures that information in a sort of more scientific way. So on the Learn tab, there's a lot of great resources. So if you go to educations, then you can get into, there's a lot of stuff on implied volatility. And there's actually like full on classes here that have like 90-minute, deep dives on things. So part 2 might be a good place to start if you wanted to, if your framework is to think about things in terms of the price of the option, and we're saying, hey, we think that thinking about it in terms of the implied volatility is going to be better for you to really maximize your profits in the options market. This is a cool place to start. Okay, but yeah, great question. Long answer. Answer is it's coming very, very soon, and it might be a little, just a variation of what you're asking. Max says, could you please show a specific backtest how to copy a link so the backtest can be displayed in community? Sure. So I'm going to create my own backtest. I'm going to look at AMD. I'm going to say when it's carried over a bunch of other conditions. I'll say when the technical open, I'll just keep it simple. Stock crosses up through the 10-day exponential moving average. There's some gains and limits set here. You can reset any of these things that you want. I have a funny time frame set here. Yeah, I have a 1-day time frame. That's okay. So now I'm sitting here and say, hey, I want to show someone the trade. This doesn't do anything right now. That's just going to lead people to the backtest tab. This little button, which shows 1 dot leading to 2 dots, at some point on the internet, people decided that's what sharing icon should be. When you click that, you can either click any of these to post something to the social media, or if you click this little thing, these 2 pieces of paper, this is like a copy button. And so now it's copied to clipboard. Also, when you click this button, the link up here changes. And so now this becomes a share link. So I can just copy this. I can go to community. I can promise I'm going to be nice to everybody, and then just paste it in here. Example webinar. This is not a real one, so I'm not going to post it because it'd just be noise for everyone in the community, but that's how you do it. How do I get text alerts? Steve, when you are on alerts, when you set alert, just enter your phone number as well. So if you enter your phone number, that should get through. Occasionally your carrier might block it or something, but we can actually see when that's happening and let you know. There's workarounds if there's an issue there, but most people receive them. So, and in the not too distant future, we're actually going to make an installable version of like the Today tab. And so the nice thing about that is once it's installed on your phone, we can send you alerts and there's no one to block it. You can turn them off, you can block it, but there's no outside person which is going to tell you you can't receive the alerts because they've decided it's spam.
When you start entering a phone number, you should see a message pop up towards the bottom, and it has a phone number that it's coming from. If you add that to your contacts, sometimes it will work around the block. Doesn't always, but if you add that to your contacts, it's possible that it will prevent it from blocking it.
Yeah, I'll see if I can pull up a text alert. Because I get so many alerts, I've kind of slowly moved over to more alerts via email. Yeah, but anyway, I can actually, if you're interested, just message support. We can actually send you the phone number to add to your contact list. Under alerts, under history, yes, you should see alerts for things you custom set yourself there. If you feel like you should have received alerts but don't see them, let us know. There's also Today tab alerts, which don't show up there. So on these kind of alerts just go straight to your email. We have a log of them being sent, but we don't put that in your alert history since it's a little bit of a different, it's not a sort of custom version of the alert. But yeah, if you're having any issue with alerts, then just email support and we'll make sure to work it through with you.
And just to clarify a little bit, all alerts in TradeMachine have to be set by the user. We don't have anything that's automatically sent from us, whether it be the Today tab alerts. You have to go in and select which ones you'd like to receive via email, or you have to set your own personal alerts. So if you haven't set any alerts, that could be the reason why you're not receiving them.
Yep, sounds good. Yeah, like if you set a Today tab alert, but you've never set a different kind of alert, then it might have a hard time tracking down your info when it's trying to send you it. So yeah, you can just go into the alerts tab and just say like, you can do like an on a calendar day alert. I actually use this to like whatever. If my kid has a dental appointment or something, I'll be like, Heidi, dentist. So you can set alerts that way, and you can send a text message to yourself. It's also a good way to make sure that the alerts are working, or you can set a stock price above alert, like $1 for AMD. Now the ticker will actually matter. And you can say, yeah, and you can set a phone. So this, you should be getting a text alert, the same day. And that will kind of validate that the alerts actually are working. Because, you might set alerts for AI conditions that don't happen very often. So you might say, like, I'm not getting alerts, but if you set 7 alerts or 25 alerts with things that don't happen that often, especially as market conditions change, you set a bunch of things all together, which are based off of the market moving up or moving down, but the market's not doing that, then just like on the today tab, there'll be groups of things that don't trigger on a certain day. So the spread the sell off is an awesome strategy. It doesn't trigger. It's a great when it does. It doesn't trigger that much. The ticker snow was sitting on here for a long time. That was a trade that you really had to bear with, but it eventually did reach its 80% limit, which was great. If you weathered the storm with me on that, then I'm glad you did. But that's kind of expected for this trade, by the way, that you're catching it as it's going down. It's going to go down a little bit more to your max profit if you're lucky, and not keep going down. Or if it goes back up, that's fine too. So the point I was trying to make is that, yeah, depending on the type of alert you set, you might go through conditions in the market where things aren't crossing very often, where there's not bullish bursts, where there's not whatever. And so you might go a week or 2 weeks with no alerts, depending on the type of alert you set. Now, if you set a wide range of alerts for up and down markets, that kind of stuff, then you should be receiving alerts. But I strongly encourage you to go into the alerts tab and just create a stock price alert and say when Google or Apple is above $1, send me an alert and verify that you are getting alerts. I think that's just it's really something that probably everyone should do when they first log into the product, is just do that. And you should get an alert the same day unless you set it in the last few minutes of the market being open. Sheldon, thanks for being here. Appreciate you. Mark, yes, we'll go deep on the IV session. If you want to actually email support and say question for a webinar, Mark, and give an example of really exactly how you're trading, because I know what you're saying about what the price of the straddle is. I'm not exactly sure how you're using that to trade, but if you give it a deeper example, then we'll try to weave that into the webinar for the IV. Gary, I'm glad your alerts are working well. Yeah, I think for most people they do, but for some people they don't. And so we'll work through it if you're having an issue.
One in there.
Yeah, I see there's a cost of annual question. Yeah, so TradeMachine Platinum is you're helping us out by paying for a year in advance so that we can pay for all our stuff a year in advance. You actually get a discount. So if you're a person that's paying $99 a month, for example, then your annual price would be $995. And if you are paying $149 a month, which is kind of the current price of TradeMachine, then your yearly price would basically be $14.95. So you basically get 2 months free by going annual. Long story short, you basically get 2 months free. So yes, we'd certainly love if you join the annual version. It helps us out, and you get a lot of cool additional features and speed as well. Okay, we're almost at the hour mark. Really appreciate you all being here. We're going to do another one next week on Thursday, and I hope you have a lot of great trades between now and then. All right, thanks everybody.